Rise and shine. Whoa, hear that voice crack. Rise and shine, my good people. We're gonna jump right into it today. Um, to start the week, usually I do some type of markup, understanding, analysis of macros, technicals. But since I knew I was gonna go live on Tuesday, and we had our bank holiday on Monday, I really I was looking for opportunities last night. Given that the market was like the first fresh trading day without any banking holiday, even though Sunday night was technically one, but I think this session will be a good one because I'm gonna go over just my process. Like the one thing I really like about these live sessions is um, they're meant to be kind of a BTS to our process and how we approach the market every day. So just wanted to preface the conversation in that, and let's get into it. I'm gonna share my screen. Log in, of course. All right, let's see what we got here. So I did mark this up yesterday. This no trade area. Price sold off last night a little bit, corrected that entire move. Good move. 11, 10, 10, 8, 10 p.m. It made that move. Um, nice move it made there. Now we've corrected that move, and now we're right back into this area. So I already kind of see where we're at from a technical side of things. Like, we're respecting this 5 minute decision making level. This was my next area of interest to go from this level to this level. From here to here, right? This is like my next level of interest. I'll have a cleaner markup for I can just do it right now actually. For my entry and my stop loss would be somewhere around here. Using this 5 minute decision making level as an invalidation, basically, something like that, right? So that's my next area of interest for sells. I'm not super inclined to take sells if I'm being completely honest. Um, and I'll kind of walk through why, when I begin my research. Um, and so I'm gonna pull up my screens for conducting my research in the light of AI. I found, I've been doing some work with prompting AI models in the way that I want to do my research. Um, so that's the thing. Once you begin working with chat, with Gemini, whichever one you're using, it starts to learn how you go about your analysis. And then all I do simply is tell it to create a prompt based on like how how you've already understood that I do my analysis. Let's see, my mic is on. I'm not sure why there's always delay in my cam. I have my cam. I can see it on my end, so maybe it just takes a second. Um, let's see, but yeah. So like prompting AI models, like once you get down a workflow in the system, and you work with Chat enough or Gemini enough, there's, I mean, I could go on more from there. To be honest, you can create your own custom. So like I have my own custom gem that's, yeah, it's if you don't know much about AI, then it's difficult to understand. But basically, I have my own Google Gemini that understands how I like to research. Like I gave it the instructions, I gave it the role, and when like I'll even share my screen right now. Actually, share my screen. All right, so this thing right here. So this is an institutional multi-asset strategist gem. Like like it has all the instructions for what I'm looking to do, right? And so like if I went to edit, right, it has this has this entire prompt that I created, one that I didn't create, but I worked with chat to create this gem for Gemini and gave it all the context, gave it everything. But this works really, really well for me. Saves me a lot of time, and not just because it saves me a lot of time is why I use it, but because of the accuracy that I appreciate. Let's see, it's February 17th. February February always kicks my butt when I'm trying to spell it. 17th. So I'll give it my model prompt that I have here, right? Something I just go in there, copy and paste that, update the date, turn this into deep research. I want this to think on pro level, and then submit. It's going to ask me, is this how you want to run the research? I'm going to confirm yes, and then I'm going to press play. Or I'm going to press start research. So I'll let it pretty much conduct my overarching research. And so you can see my prompt, like I'm looking to understand basically the DXY yields and gold. So the only things I care about, DXY yields and gold. There was a point in time where I had stocks in here. Like I want to understand NQ. I want to understand the Forex. But I was just like, you know what? I'm going to be known for trading gold. Like when I get on these lives, you can absolutely 100% guarantee that I'm trading gold. Like no questions. Will there be a point in time where I day trade specifically something besides gold? I'm going to tell you no. I've made that decision as a trader. I don't need to trade anything else. Why? Just because I don't need to. Period. I just have no desire to actually day trade anything else, because what I found myself doing is getting pulled in different directions. There's multiple technical analysis going on. I'm trying to not trying, but if I'm trading multiple things, then I need to understand how the fundamentals impact multiple things, because there's no one size fits all, right? And so I just to simplify it for myself and to allow me to master one asset, I've made the decision. I'm trading gold, period. And so, yeah, I got my AI model. I got Gemini running this, and I'm gonna let it work. I'm gonna let it work on that in the background. From there, and I'm walking you this process specifically to show how I prep from a like this is the first session that I'm engaging in this week since the banking holiday. So I'm sharing this just to show how I go about getting up to speed per se, right? Um, I don't know why it just took my mic from me. Hope you guys can hear me. Test, test. Can you hear me still? Q, if you can throw a thumbs up in the chats, if you can still hear me. But I'm gonna pull up my Forest Factory, which I already knew this was here, right? Like I already knew we didn't have news yesterday. I already knew news was light today, because tomorrow's really the main day for news to kick off for the week, which is FOMC meeting minutes. We have GDP on Friday, manufacturing data on Friday, services data on Friday, trade balance on Thursday, which trade balance, that tends to be a very manipulative day. Um, and so tomorrow is kind of the uh, the meat for news this week, and then Friday I'd say is the potatoes. So you got to have meat and potatoes. You just can't have meat, right? Um, but anyways, so no news today really. So that's good. News is pretty lights. I'm gonna pull up Reuters, right? I'm gonna go on to the market section on Reuters, and I don't want to look at Jesse Jackson. I want to look at what are the main headlines right now. So let's see. Dollar basically reviving itself. That's kind of what the market is saying right there. Besides that, okay, global stocks muted as AI jitters. US Iran talks keep investors on edge. Okay. So even though this isn't about gold, my focus is this part of the headline right here. US Iran talks keep investors on edge. So after my research is conducted, I want to see something in there on US and Iran. And if there's not, then I'll make sure I prompt it to pull stuff on US and Iran. I know those conversations are somewhat around nuclear, if I'm not mistaken. Um, but another round of US mediated peace talks between Russia and Ukraine also began on Tuesday, which is great. Today's Tuesday. We are the US, right? um, so that's important as well. Like, I'm not gonna go through and read all this, um, just because I want more context behind it. Like, if this is not gonna give really much context behind it. If tension in the Middle East eases or meaningful progress is made on Ukraine war, the risk premium currently built into gold prices could swiftly unwind. And so, even though this is talking about oil, I know I just said gold. Even though this is talking about oil right here, the focus is the macro aspect. It's the U.S., Iran, and Ukraine negotiations. That's the main portion about it. The market remains unsettled by geopolitical uncertainties. We know gold thrives in two different type of environments: policy driven environment, and uncertainty and fear, right? And so this is that uncertainty and fear aspect side of things. And so when I come back to the charts, right, and I see that, oh, okay, gold's actually been, if we go to the 15-minute chart, gold's actually been down the last, you know, few days, right? Like, I'm not super phased or like, I'm not ready to just completely shift the opportunity that I'm not going to say opportunity, and I don't want to say biased, but I'm not going to completely shift my perspective. I realized I wasn't sharing my screen, but look, based on everything I just said, right? This is what I was looking at. If we go, gold's been down the last handful of days, since February 13th, right? Or 15th, let's call it February 15th to today. But I'm not ready to shift my bias. And I'm just going to use bias for lack of better terms. I'm not ready to shift my bias because of what I'm seeing from the fundamental headlines. And not even just the headlines, just the identity of gold when we are in a policy driven environment and a fear and uncertainty driven environment. Those aspects are not going to change. Why? Because of the nature of gold, right? It's a safe haven demand. It's stable in terms of its value, right? Like, it's just the word safe haven sums it up completely. It's something you can have some type of certainty about, not in the way that it's going to go up or down. I just mean in its value, right? Like, we can see on just a bird's eye view perspective, like, an eagle like perspective, this has been gold all time, right? And that's on the monthly. If we look on the weekly, it's pretty much the same thing. Like, yeah, we had this period down here, 2000s, 2022, 2023, but like, for the last 3 years, we've just been climbing, right? And so that's why I say I'm not ready to just because we've been down, I'm not just gonna say, okay, the trend's changing. It's just if there were some fundamental factors to point towards the trend changing, I can understand that. But there really aren't yet from what I've seen, right? So it's pretty cool though. But like, look at this. Based on the prompt that I gave it, it's gone through 226 different websites already. It's only halfway through, right? It gives you all the sources. Like, it's gonna do more research than I can do. Especially, I'm not gonna say more research that I can do, but in the amount of time that I want to get it done, like I want to be efficient and I know what I'm looking for. Like, some of these websites may not have what I'm looking for, right? Exactly. But there may be a few lines in there that pull some context for me. It's just I'm all for using AI to be more efficient. So that's why I wanted to show that to you. And so US, Iran, Ukraine, um, nuclear talks. I did see something like that. You know, we think of June 1st with the US acquiring Greenland and the European nations that oppose that um, could potentially be hit with new tariffs from the US. Like, we think about all the fundamental factors that are surrounding the market right now. In my opinion, they all favor gold being in a bullish environment. They all favor that. Um, you think of data, right? You had data last week, core retail sales lower than expected, unemployment claims, CPI lower than expected, right? Those are data points that favor rate cuts. Oops, I didn't share my screen again. Got to remember to do that. But core retail sales, right, lower than expected. CPI lower than expected. Those are data points that favor rate cuts. Right? Period. It doesn't change. Like, it's not. I probably say this every time I'm on live, but one thing I love about trading is there's no way it can hide anything. There's no. Yes, I understand manipulation. Yes, I understand liquidity sweeps. Yes, I understand things like that. But I just mean from a fundamentally technical level, right? There's nothing to hide. There's no secrets. Like, the data is what the data is, and the data means what the data means, and the fundamentals are what they are, and they're going to drive the market based on their principle, based on the nature of the data, of the fundamentals, and how it impacts different assets. Does that mean it has to do it right away every time? No. Does it mean that it has to do it for it's in just through infinity? No, it could. The fundamentals could move price for a couple weeks, and then it could relax, and then other things take over. But the fundamentals will always win in the end. Like, they will always win in the end. I have no doubt about that. And not even just from like the understanding and the knowledge and the awareness that I have of the fundamentals, but from an aspect of um, historical price. Like, it's something that we've seen over and over again. And so this is the next thing I'm looking at right now is the CME FedWatch tool. So right now, rate cuts are at a 90% chance they will not get cut in the March 18th meeting, right? So that's something else I'm thinking about. Okay. Rate cuts are, pretty on the stronger side of holding steady. We do have a month from this date. And so we think of the news to come. We got GDP, we got flash manufacturing services, we got FOMC meeting minutes, which could give us a lot of insight on the future of what the Fed is looking to do. We got PPI next week, right? And so we just look at the data that's up to the plate, per se, in the dugout on deck until March 18th. We have a lot of data that could then shift that narrative. Okay. So I store that in my brain. I store that away. Right. Um, and then now I just really wait on my Google Gym to finish its research. It's gone through 298 websites. Um, But then you'll see what I do with that. Um, and yeah, so we looked at the news. The very last thing I will pull up is Baby Pips. And Baby Pips is sitting in a heavy risk off scenario. Okay. So now I'm curious. Now I want to know, why are we in such a heavy risk off scenario? Okay. Let's think about what we've gone through already. I can say there's a good chance we are in this environment because of US, Iran, and Ukraine um, discussion, mediation that's taking place today, and the headlines that that came before the talks today. Because I saw this yesterday about the nuclear talks between US and Iran. Um, and so the market is in a heavy risk off environment right now. Which, does gold thrive in risk off, or does it not thrive in risk off? I'll give you a second to put it in the chat. Give you a second to put it in the chat, because I don't want to give you all the answers, right? I don't want to give you all the answers. The answers are out there to be found. But if you put it in the chat, thank you. If you didn't, I knew you were thinking it. Gold does thrive in a risk off environment. So once I come back to the chart and I see we've been down, I'm not phased. I'm not worried about it, right? I'm not worried about it at all. So see how much room I got from here to here. That's not. I don't like that. So if I look at from decision making level to decision making level, that's 20 points. To be honest, I'm not gonna say to be honest. I'm always being honest, but that's not enough reward to that's not enough reward for me to be comfortable with risking a trade here. Like 20 points, that's just not enough reward for me to risk. Like, I'm probably gonna have to risk 15 points, maybe 10 points. Anything over that, like, I'm closing in on a 1-to-1 risk to reward ratio, and I don't like taking those. I do my very best to not take any when we're talking about our R multiple. Um, and you can go look up what R multiple means. I'm not going to explain it right now. But when I'm talking about R multiple, I need at least a 3R, right? So basically a 3-to-1. 2-to-1, okay. I'm good. 2-to-1, at least I'm doubling up. 2.5-to-1, okay, now we're getting a little better. But 3-to-1 is what I'm looking for. And not from a sense of greed, or a sense of trying to hit home runs or any of that. It's just about patience. Like as long as I got my levels, like this trade right here, let's say price were to sell, right? Like my trade, my entry becomes somewhere around here, like I said, right? And that'd be a 6-to-1. And you're thinking about like, wow, 6-to-1, like that's talking about your 9 home runs. And that's just me trading level to level to level. You know what I'm saying? Like that's just me trading level to level versus me trading level to level right here. Right? About 2.3-to-1. 15 points to risk 6. Like the risk to reward, you know what I'm saying? It's just not enough for me. So it seems like this session's going to be about patience, which every session is about patience. So let me not say that, but even this environment we're trading in right here, because we've had all of this, like this is a no trade zone for me. I don't want to take trades between this area. I honestly could make this entire area of price a no trade zone because I'm not taking a buy from here to here. I'm not taking buys in this area, and I'm not taking sells in this area. So like this whole area, I don't want to touch. I just want to observe. I just want to observe. Let me make that a little bit lighter. And then there's one other thing I'm going to shine some light on. Check my research. Oh, beautiful. All right, so look, gives me all this, and I've read this multiple times, like the outputs that it's giving me, so I know we're in sync, right? Gemini and me, we're in sync, and then it goes through all the different articles that it went through, right? Yes, it's gone through some Wikipedia. Yes, it's gone through YouTube, but I see some investing.com. I saw some tradingview.com in here. Like, so I know that it's looking at good sources, right? It's looking at good sources. But what am I gonna do now? I'm literally gonna copy this. I'm gonna take it to my macro gravity scan where I compile all of the research that I do with Gemini and that I was doing before that. Um, if it wants to refresh. So you see I got all these different dates here, right? I'm gonna simply go like here, boom, change the date to 17/2026. Boom. I'm gonna go back. I'm gonna go to my notebook LM, right? My macro mind. I talked about this last session, but I didn't have it on my screen. Sorry about that. I'm going to make sure that my gravity scan is updated by clicking sync to drive. I want to make sure it's updated with my most recent one from today. And then I'm going to prompt my notebook LM that's going to respond to me based on all the research that I have in my personal library. Like all of this, it's only going to look at these sources. It's not looking at anything from the web. It's looking at all the sources that I've already gathered, right? Let me make sure it refreshed because I exited out. Perfect. So it's good. And then I'm gonna say, based on the macro gravity scan from 2/17/2026 and what we know about the macros and how it impacts gold, what are the key focuses, right? We'll put key factors I should be paying attention to as of 2/17 when I am observing how the macro factors could impact gold. Boom. And then we're going to let it do its thing. Like I said, it's going to pull all of my sources. It's going to basically summarize. It's not going to summarize. It may summarize it, but it's going to look at the 2/17 gravity scan that I just did, right? And it's going to give me some insight. And we may be getting the opportunity here. Oh, I want to shine some light on this while we're here. I know you guys see this down here. Normally, I'm using the MACD, but I've been playing around with this relative strength index. And there's a lot of correlation between the relative strength index and the MACD. And so I want to shine some light on the value that I see in refinement. Right? I find value in refining things. And this was one of those things where I've seen it time and time again. And I was curious on the correlation between the two and possibly the simplicity that I could gain from the RSI versus using the MACD. Yeah. And so if we look, this is the daily, right? And we see that, the MACD signal lines, like they're pretty much mirroring what is going on this RSI. So like I see that confirmation. I'm like, okay, that's good. Like I want to see some type of parallel indications from these two. But the one thing that I have difficulty with when it comes to the MACD sometimes is the volume, right? Like there's no way for us to um project if the volume is going to slow down. And what I mean by slow down, like if we're buying, like there was no way for us to project that this bar was gonna come in right here. You know what I'm saying? Like this is a weak buy volume bar. There's no way for us to to anticipate that from the way the MACD shows itself. It's something that we just have to wait to happen. But what I know about the RSI is when we're in overbought or oversold environments, right? I know that's a big part of volume and price movement, like when we're in an overbought or oversold environment. So that was the main reason why I'm like this week and for the next month, like I'm gonna basically forward test my our same approach. Like for me, in my opinion, the RSI, the MACD, like they're both reading the same type of thing. They're reading trends, they're reading volume, they're reading buyer's environment or seller's environment, right? And so like the Ichimoku cloud, that's a constant in the system that we trade, the VXT system. That's a constant that will never change. But I feel like the this is beautiful right here. With no news today, I'm gonna take a nap. I'm taking that. It's beautiful. Why is it beautiful? Marcus, tell me why it's beautiful. Because I get this break of this 5 minute decision making level. Why is that significant? Because we had this trade overnight, right? We had this trade overnight. Let me get a better arrow in here. We had this trade overnight. We're priced basically just sold off to this level. After it sold off and broke, it consolidated, and now we were just living in this range, right? We don't have any news today, but now we get this break in this 5 minute decision making level. And so I like that. As far as like this RSI, right? We're not in a oversold environment relative to where we were over here, right? So you see price over here, RSI over here, right? And now this is where we are, and price isn't at that oversold environment yet. Because I don't want to trade when we're in an oversold environment. I don't want to take a sell, excuse me. But I will take a sell as we move towards that oversold environment. So that's just I'm like I said, I'm forward testing this RSI, learning how it functions. Not learning how it functions. I know I have an idea of how it functions, but observing how it functions. Like I want to understand when it reaches these oversold areas. How does price operate? Right when it crosses above this white line, right, which is the moving average. I think it's this SMA moving average. Well, the SMA, the smooth moving average. I want to know how it operates when it crosses that, right? And you can just observe from price. Like when it crossed right here, we started to head up. Yeah, we did consolidate, but ultimately the direction was upwards, right? Um, so yeah, and oh, this is the other thing. The main reason why I liked the RSI is because I've been using it on my DXY on higher time frames, especially so like my daily. Um, so like from a daily level, like there's still plenty of room for us to continue moving downwards on this RSI, right? But I just wanted to shine some light on that, and just in case you guys noticed, look at this guy using all these different indicators. Come on, man. There's a method to the madness. Like I'm not gonna sit around and act like I prefer to trade without indicators just because it sounds cool. Like I think that's when I observe some traders, I feel like that's my interpretation. Like people just want to say they don't trade with indicators just to say they don't trade with indicators. But like if we really look at it from a logical sense, and I'm a practical guy. Like I like to understand things practically. If you can have something that helps you trade, would you? It's like to me, it's like a no-brainer. Like there's no reason for me to act like I don't need help. You know what I'm saying? So, but yeah, I'm in that trade right now in validation point. So like I'm in some decent profit right now, right? But that was all off of one candle, right? That was all off of one candle. So I have no desire to really slide my stop loss because I have nowhere to slide it to, right? Like I would love some more price action in here for me to actually slide my trailing stop to. Now we are running onto this level right here, right? We're seeing maybe buyers step in a little bit right here. But this 5-minute decision making level is my ultimate invalidation point. If price comes all the way back up to this 5-minute decision making level, I'm closing my trade. And just so you know, I'm not playing. $60. I'm risking $60 right now to collect on because I'm taking it to this 15-minute decision making level. That's my ultimate take profit area. 11.15, so about $1,100, right? That's what I'm looking at right now. Ideally, perfect world, in a perfect world, price does that. Perfect world, right? But we know we live in the world ain't perfect. Not always. Sometimes we live in somewhat perfect, you know what I'm saying? Somewhat perfect. So what I'm looking for is at least something like this so that I could then slide my stop to one of these decision-making levels, ideally that pop in, that come in here. Ooh, I almost just messed myself up just by showing that example. You guys saw that? I almost freaking got myself stopped out. I would have been a little upset just because I don't want to collect right here. Not ready to collect. Like, and that's the thing. Like, I've come so far as a trader because, like, man, months ago, maybe like I say like 6 months ago, I would have collected already, just because I see price rejecting. I'd have been like, nah, 400, I need that. Like, bro, it's not about that. It's not about that. If I can get some more price action in here, yes, I will make sure I have a trailing stop to collect. But right now, we just got a strong push from sellers, right? And so this is, I mean, 7:02. We're in the beginning of the session, right? We still got 2 hours left until New York and London overlap closes, right? There's just still plenty of time. And so if I don't get any additional price action, that's a good sign because that means we rent and we hit this take profit. If I do get some additional price action, that's still a good sign. As long as we don't just completely head back in the other direction. That's like worst case scenario is price just does this. It just comes right back here. Like, I'm not going to be upset because you guys are seeing why I'm doing it. Like, I'm not going to be upset at it. I'm just going to, just a game. It's just a game of probabilities. Like, but I don't want to jump at the dollars. That's the point. I think that's the point I'm trying to get across. I don't want to jump at the dollars, right? I just want to trust my system, trust the play, and just let that be what it's gonna be, right? So we're gonna watch this. We're gonna watch this. I was gonna go back to my macro mind, but we're gonna watch this. We're gonna watch this. We're gonna see how price wants to operate right here. There were some talks about a firmer dollar that I saw via an article. So let me share that. Let me share TradingView real quick. I gotta do this once I share my TradingView. So like, this is TradingView. get rid of that. Let's pull that up. And so this is the dollar. Disregard my decision-making levels. They're there for a reason, but I haven't cleaned this up in quite some time. But if we just look at the overall direction, we got us coming off of this oversold environment from the DXY. We're respecting this 8-hour decision-making level. Like we've seen this price action at this level, right? And so if the dollar is going up, traditionally gold goes down, right? Has that been happening all the time as of late? No, but it's still the nature. You know what I'm saying? It's still the nature of how price functions, of how gold functions with against gold. So yeah. Exactly. Tools are inevitably a part of the system. Run experiments. Run experiments. I do see 7:06. I'll hop off at about 7:10. Start getting ready for work. Work day. And I'll actually while we're sitting here, either this is gonna hit my stop loss or it's not. So we don't need to sit here and watch it right now. I wanted to show you guys this really quick. Um, just to give you an idea of what this notebook LM does, and then the accuracy of where we're at right now. And so let's see, headline, the key factors you should be paying attention to regarding gold are the structural flight to cash, driven by geopolitical fragmentation and the AI wrecking ball effect on institutional portfolios. Yields versus the dollar. Falling yields weaken the dollar, which boosts gold. However, Feb 17th, U.S. Treasury yields have fallen. So this is saying that this is how yields in the dollar normally function and how it impacts gold. However, as of today, the yields have been falling, but gold has risen. Okay, something to think about. Impact on gold, systemic de-risking event. Institutional capital is moving into USD, not for yields, but as volatility buffer against trade friction. Okay, what trade friction? Well, we think of the stuff that I mentioned with the European countries, the US with us, with the US getting Greenland, potential tariffs, right? That's trade friction, right? We think of the US, Iran, and Ukraine nuclear talks. We saw how that impacted oil prices, which oil is a big trade asset, right? This flight to cash can temporarily cap gold's upside if liquidity dries up, as investors prefer the immediate liquidity of the dollar over the store of value properties of gold during acute stress. Okay. AI wrecking ball. Let's see. This internal disruption forces institutional risk managers to tighten the value at risk. That's something that I would then look up because I don't know what that means exactly. As they rotate out of high beta technology. Okay. Liquidity vacuum, market mechanics are currently more dangerous. Combination of lunar year, president holiday. That makes sense. Then liquidity allows algorithmic trading desks to engineer Judas swings. Wow. False price spikes designed to trigger retail stop losses. Specifically, watch for artificial spikes above 49.90 that fail to hold. These are likely liquidity sweeps. So yeah, that's just technical stuff, right? But okay. Basically, what I got from that is the dollar is gaining some strength because of this whole flight to cash narrative, which is caused by the trade friction. And even though this is telling me investors prefer the immediate liquidity of the dollar over the store value of gold, like I'm not just gonna take this information as absolute and think that there isn't another perspective. And just because AI put it together for me based on the research that I gave it, that doesn't mean that I'm just gonna agree with everything that it says. Like that's not how I use AI at all. I just don't agree with everything that it says. I take it and I understand it and I, you know, um, question it as well. Um, but it's just a way for me to get up to speed with what the market is feeling, you know. So we go back to my chart. We see basically came right back to my entry, which no harm, no foul. Like I said, if this it's either gonna hit my stop loss or it's not, right? Um, and yeah, it's very easy to think like, dang, Marcus, dude, freak, bro. Yeah, I was in $500 profit. Why didn't you just collect? Ugh, why didn't you just collect? I mean, it's easy to think that. That's not the point. I'm not chasing the dollars. I'm following the process. My process was if I get some more price action, I'll move my trailing stop. If I don't, it's going to hit my stop loss or it's going to hit my take profit because price was moving so quickly, right? But if I get more price action and we continue to move down, yes, I will move a trailing stop. I will make sure I collect. But the decisions that I make are not going to be off chasing dollars. They're going to be off following a process. Like that's the title of this live. And I just remember that I titled it this way: process over P&L. Period. Period. I don't man, I'm getting too passionate right now. But I get passionate because I love this stuff. And I hate the way I see trading marketed. That's the main point. I hate the way trading is talked about. Like out of I'll say 95% of traders. I just and there's a lot of traders. So that 5% makes up a big pool of people. Right? There's a good amount of people that I see that I observe that are talking about trading in the right ways. Right. But there's a good amount that corrupted. And that's why I always got to talk about what we focus on and our approach. I don't Is the goal to make money? Absolutely. I'm not just doing this for fun. The goal is to make money, but money is just a byproduct. Just like anything in life. There's I heard Myron Golden talk about one time when it comes to like even like working. Like if we stopped looking at money or looking at work, I got a 9 to 5. I don't look at my 9 to 5 in this way anymore. But there was a period of time where you looked at your 9 to 5, your job, as just a means to work to make money to pay bills. But what if, you don't have to do it, but just play around with the concept of what if. What if we looked at it as a means of developing skills? And then money was just the byproduct, right? So like it's not just trading that's that way. It's everything. Let's look at things from the perspective of developing skills. What type of skills do we develop here? We develop patience, we develop consistency, we develop discipline, we develop reflection, we develop experimentation, we develop observation, we develop analysis, we develop money management. Like we develop these things just through trading. Like those are just skills that we develop that can translate anywhere. And then as long as we are doing what we should be doing when we're developing those skills, eventually it's going to pay us. And what do we know about eventually? It's undefeated. We know that, right? So I'm not going to say that I don't care about the P&L, but like I care more about the inputs. I care more about my process than I do the P&L, because the P&L is is a output of everything I put into it, right? And sometimes the P&L is just the game of probabilities, right? And I know I said I was going to get off here at 7:10. I do need to start getting ready for work to go develop some skills, right? And so this is either going to hit my stop loss or it's not going to hit my stop loss. Um, we are approaching it potentially hitting my stop loss. However, I don't know what's going to happen. You don't know what's going to happen. Nobody knows what's going to happen. Ultimately, if it does hit my stop loss, I'm not looking for trades, remember, in this area, because this was an area of basically a no trade zone that I had. Um, definitely from this area to this area, my confirmations wouldn't even come in. And so if we think about, okay, if my confirmations come in from here to the next decision making level, this is what we looked at the very beginning. There's just not enough risk to reward. So this area is just a no trade zone for me. So the next opportunity that I'd be looking for is after we break this 15-minute decision making level here. I'd be looking to take buys from here to here. Even that's a tight window. So you know what? I'm not trading within this area, right? Like that's 5,000. So and you saw why. Like I'm not fearful. It has nothing to do with any of that. It has everything to do with just my process for risk management and my approach. Okay. Like I gotta have enough room for price to move, because I don't like to trade through decision making levels. I don't like to trade through them. I like to trade to them. I like to wait for price to break through them for me to trade away from them. You know what I'm saying? Like I'm never trading. I'm not gonna say never, because I have been in it before and it's got me in trouble. And there's a reason why that's a part of my process, but I don't like to enter trades. Let me just put it on something like here. So like let's say we're gonna buy. I don't like to be in a buy and then hold my trade through here when the risk to reward is already, and that's actually not bad, 37 points. But when the risk to reward is small, I don't I don't want to rely on price breaking through that decision making level to continue my trade. Now, this one, for example, I would be okay with trading from here to here and price continues to break, because what can I do? I can scale in, right? I can scale in. If price is going to keep going down, I can scale in. But when I don't have a lot of room for price to move already, like, and I'm moving in between two very force field like decision making levels where we've resisted price multiple times, like we did in this area, right? I'm putting myself, and this is just my approach. You can approach it different. Maybe 20 points is enough for you to take a trade, right? And that's totally okay. Maybe after you move to that decision making level, you wait for price to break and you scale in. That's totally okay. But the initial risk for me isn't enough for the maximum reward that could be there if price stopped at that decision making level, right? So yeah, if price hits my stop loss and starts moving upwards, I'm not gonna be looking for a buy until we move above this 5,000 area, basically. Like that's where my next key decision making level is. So 510 roughly. Then I'll start looking for buys again. But until then, I'm in this sell. Um, if you're curious on how this trade ends up, feel free to drop something in the comments. Otherwise, you're going to see me posted in the Circle community. If you want access to the Circle community, it's pretty sure it's in the link in our YouTube bio, but just for simplicity purposes, I'll throw it in the description of this live. Um, I'm not trying to get you guys to join the community. I'm literally just saying if you want to follow the trade that I had today, like I'm going to share it if you don't leave a comment on this video. But other than that, we will be back. We will be back live trading on Thursday, where we did Thursday have imbalance or trade balance. Thursday does have trade balance. Anyways, that'll give us a good day to see how trade balance impacts the market. So I'll be back on Thursday. Let me make sure to look at the comments. Could still be the biggest trade of your life. Exactly. You never know. You never know which trade that could be. You never know. You never know. But other than that, appreciate you guys for jumping on this. Appreciate you guys that watched live after the recording is posted. But I'm going to go ahead and get my butt ready for work because I am running behind. But that is okay because the YouTube University, YouTubeosphere was more important than me getting ready this morning. You should feel special because you are. But anyways, I'm out. I'll catch you guys on Thursday. Peace.